Let's dive into our grain market activity here. I'm Marlin Bohling with you, and I want to welcome aboard Chris Swift of Swift Trading Incorporated based in Nashville. Chris, happy Monday morning. How are you?
I am doing very well, Marlin, and yourself this morning?
So far, so good. Watching the grain market surge ahead this morning. Let's take a look at the corn market. And of course, the corn has this backdrop of another overnight sale last night. 596,000 tons of corn to China. And the corn is higher. However, it's off of its earlier highs this morning. So it surged out of the gate, and it's kind of dropping back a little bit here. Let's go with December. By the way, today is first notice day on the September contracts today, so deliveries will start today. The December contract on corn, now 2 1/4 cents higher. We're at 361.5, and that's after we got as high as 364 1/4. So we've already given back about 3 cents from that early go. In the soybean market, with the quotes provided by bar chart, we have November now 8 3/4 higher, and we're at 959 1/4 after hitting a high of 966 3/4. So here we've given back about 7 cents already this morning. So keep that in mind. Now on the wheat in Chicago, we have December now 9.5 cents higher. We're at 558 1/4. It got as high as 560 1/4 before backing away a little bit. In the Kansas City market, we have December now 11.5 cents higher at 483 3/4, within 2 ticks of its high of the day. So look at it go. In the Minneapolis market, we have the spring wheat trade on December 5 1/4 higher at 544.5. That's 3 cents off its earlier high this morning. And in the cotton market, we currently have the December contract now 34 points higher. We're at 65.42 cents per pound. And Chris, as we get things rolling here today in the early going, the first few moments that the trade was open today, it looked like the market was going to take the baton and run away with it. But now things are kind of settling down a little bit. Is that what you expected to see?
Yeah, kind of. We noticed it last night on the higher opening. This is about a $1.20 rally in the bean market from the low end, and about 40 cents in corn. And we're just weeks away from harvesting, with silage already being cut in a lot of places. And we know that we'll start selling corn down south and move that abruptly up north there. But yes, it seems like with that kind of rally, you should be getting some more farmers selling in there too. Whether that makes the market go up or down, I don't know. But a $1.20 rally is an awfully good price to start marketing into.
So what do you think about that? I mean, here the concern was the dry conditions during the month of August can lead to maybe reductions in soybean yield. All right, August is over as of tomorrow. So now what? I mean, once you get into September, what happens with potential yield?
You know, it just depends, because it's a very small area that's in the drought impacted. It is that far northwestern portion of the corn belt and soybean belt where we see the majority of that dryness. So I don't think it's a big enough area to impact the soybean market as a whole. It's probably just in that one little bitty area that we've seen. And I think once you get to harvesting, and once you know that South America is probably going to continue to plant fence row to fence row down there, that there's still going to be ample amount of soybeans left at the end of this year.
Yeah, but that wild card is La Nina. What about that? That is kind of rearing its ugly head.
I don't know. That's for Tim to tell us.
So it sounds like the odds are now about 70% that we will have La Nina this fall and heading into the winter. And sometimes that can throw a monkey wrench into production in South America, that's for sure. How aggressive would you be about marketing new crop corn and soybeans right now, given the rally we've had?
You know, honestly, we have been looking at that. Last week we made some recommendations for some farmers to be booking some corn and booking some beans, and I see no quarrels with marketing while the market is higher. So that's one thing that we like to do. When the cattle market was rising, we marketed into it. Well, now the bean and the corn market is rising, we'd like to market into that too.
All right, well, very good information, and we're going to pause here, Chris. We'll be back in just a moment. We'll take another look at that livestock trade here on a Monday morning when we come back. Sugar market up about 5 cents a hundredweight this morning in the early going. We are talking with Chris Swift of Swift Trading Incorporated, based in Nashville, Tennessee. All right, let's take a look at our livestock trade here, Chris. We had the cash cattle market that wrapped up last week around 104 out in the country on some light movement Friday afternoon. And today we have the August, of course, it'll be going off the board today, and it's just kind of hovering around that 104 mark. Right now on the low of the day at 103.85, that is 62 cents higher, it says. October, though, That's going to be where most of your volume is going to be. And October is 17 higher now, 17 cents higher at 105.07 per hundredweight. So let's roll over to the feeder cattle market. And here you have the September 47 cents lower. We're at 139.55 per hundredweight and off of our earlier high by about, roughly 60 cents. We have the October contract 60 lower at 139.57. We're lower across the board and fairly consistently. We'll go about 35 to 60 cents lower here on the feeders. Lean hog trade, as we are trading here about a half hour deep into the session, or 45 minutes deep. We have the October contract 40 cents higher now at 54.05 per hundredweight. Just about a nickel away from our high of the day, and December now 45 cents higher at 55.65. So it seems like maybe that higher corn market is impacting the feeder cattle market a little bit. The lean hog market, it did get as low as 53.17. I see, Chris. Now it's back up at 54.02. So we've gained back about 90 cents or 85 cents or so. What do you think is going on here? It's turned around already.
Well, the index has been really firm. This morning it was down 7 ticks at 57.05, but that index has been firm all week last week. And I think the hog market right now is just kind of sitting in limbo. They know that we've got continued demand and greater export demand over the last several weeks, but domestically we still are missing the same things we're missing in the beef market, and that's our food service industry. And without that food service industry, we just have fewer establishments open to market that meat through.
And what about the on-feed number impact here on the live cattle trade?
Sure seems like a lot of cattle to have to work through between now and the end of the year. The carcass weights, everybody noted, is still very elevated, and we just have a function to go through. And that function, again, as we stated before, pushing elevated beef production into fewer outlets that we have to market it.
Maybe a retracement is in the works. All right, thank you, Chris, for talking with us. Chris Swift of Swift Trading Incorporated in Nashville. Janet?
All right.